All right, going live in 20 seconds. Hello and welcome to Ethereum Classic Community Call number 32. Today is the 22nd of November, 2022. This week we are doing something a little bit different. We're on Twitter Spaces for the first time. So if you are joining us for the first time on Twitter, Ethereum Classic Community Call is a weekly voice chat that happens usually on the Ethereum Classic Discord server at ethereumclassic.org/discord. But this week, and maybe from now on, we're going to be testing Twitter Spaces. We usually have a thing called the Green Room 1 hour before each call, which is a separate Twitter space that is not recorded. But this call is an open discussion. So please feel free to jump in at any time. And you can request to speak via Twitter Spaces. And either I or Brolau, the co-host, will try and approve your request to speak. You can also raise your hand emoji if you want to speak in that way, and we can grant you access. This call is going to be streamed and is currently streaming on YouTube. So if you're on the mic, please follow Twitter's and YouTube's rules. As this is our first time on Twitter, please try to keep things respectful and please bear with us if there's any technical things as we get used to the platform and Twitter Spaces. You can also post questions and comments in the Discord on the Community Call Notes channel, on Twitter or on YouTube, and we'll try and respond to these messages. You can find an agenda of this call in a response to this space that I made on Twitter, and that contains links to everything we're about to talk about. So hello and welcome everyone, and I hope this new Twitter space thing works. The agenda this week is, as usual, we have the Vitals ecosystem updates. We're going to be talking a bit more about Twitter Spaces and open up the discussion there. The FTX fallout and how this might affect DCG and ETC in turn. Talking about co-op infrastructure grants, Mastodon, and some ideas about bridging the different Ethereum Classic communities. And of course, there's always going to be the free talk section at the end. So first of all, thanks to Brolau, the co-host, for helping with streaming this on YouTube, and D_A for the graphics. And let's jump into it. So this week has been, I guess, unsurprisingly bearish due to the wider ecosystem trend, largely due to the FTX scandal, which we will get into a little bit later. But yeah, Ethereum Classic went from $22 down to $17 this week, and that follows basically the whole cryptocurrency space. In terms of hash rate, it didn't really make that much of a difference. I mean, there's a slight drop down to 133 terahash, but we're still in the kind of floating along stage post-merge. So not looking too bad on the security front. Before I go ahead, I just wanted to check if we have anyone that wants to become a speaker who is not a speaker. This might take some time to get used to. I apologize. We got ETC Co-op inviting him to speak, inviting a bunch of people to speak. Okay. All right, so moving on. So one of the ecosystem updates this week is that the ethereumclassic.org website is now in Chinese. So you can visit ethereumclassic.org/ZH, and that will take you to the Chinese version of the website, which is currently just machine translated. So essentially Google Translate. And there is a banner at the top of every page encouraging Chinese speakers to contribute translations. And if you are a speaker of any of those languages, which are announced in the blog post that you'll see on the website, then please come forward and help us with translations. The translations that we're looking to publish in the next few weeks are Korean, Spanish, Japanese, Russian, Vietnamese, Arabic, Turkish, Hindi, Thai, Malay, Croatian, Greek, Dutch, French, German, Italian, and potentially Cantonese. And if you have any ideas about changing the order of that or additional languages that you might be able to help with, please, again, look at the link on the website to the translations, progress, schedule, and volunteers issue on GitHub. We would really appreciate you helping us out there. The other update is that ETC Co-op have released their Q3 report of 2022. Some of the highlights include notes on the Aragon development, which is a Go Ethereum fork that reduces bloat and allows synchronization of Ethereum Classic much more quickly, which is seemingly a no downside upgrade for the Ethereum Classic network. And I think this would make participation in Ethereum Classic a lot easier on lower end hardware. So I think that's a really awesome thing to keep an eye on, and hopefully that becomes a good to go project from the co-op. They also launched Gnosis Safe, which we talked about last year. And there is a new documentation website about evaluating 51% attacks on Ethereum Classic. And that was created by Meowbits to show how ETC has basically 6 times more security than the next Ethash mining algorithm, which is, I believe, FPOW. There's some other interesting financial details as well if you're interested in that, and you can find that on the Ethereum Classic Cooperative website. Also, just before the call, a video was posted by ETC Co-op called Who is Bob Summerwell, which has some interesting history and a bit of backstory into Bob's involvement in Ethereum Classic and Ethereum. So I just listened to it before the call, and it's pretty interesting. And hopefully we can get some participation now. Again, apologies for the sort of clunkiness of this. I'm still trying to get used to the Twitter Spaces thing, but if anyone has any new apps, NFT projects, or comments that they wanted to make before we move into the main topics of the chat, now's the time, and please raise your emoji hand or request to speak if you'd like to. The floor's open for a minute. Okay, I don't see any requests to speak at the moment, so I will move on, and hopefully we will get some participation. So yeah, Twitter Spaces is the first topic. And okay, so it seems like someone, I'm just reading the Discord, and someone does want to request to speak. Still getting used to this, apologies. It seems like there may be people that are trying to speak, but maybe are not logged in. For those of us coming from Discord that might have found this Twitter Spaces thing to be new, one of the downsides is that you need to use the application, I think. So it has to be on a mobile app in order to use it, in order to speak, that is. You could listen without any participation on the web browser, but in order to speak, you need to download the app and use it that way. So that was one of the limitations we found, and perhaps should have communicated before this call. But yeah, I can see that someone is, I hope, Ronan wants to talk, but is not able to because of that, I think. So we will move on, and maybe he can download the app and log in that way, and then join us later. In the meantime, let's talk about Twitter Spaces. And I guess that's one of the downsides, is that the app is kind of new and doesn't have a web browser version yet. It also doesn't have video sharing. So for the previous presentations we've been talking about and sharing on the Discord server, we're gonna have to find a workaround for that. If anyone wants to jump in and let us know any way to solve that problem, then please do. And I'm seeing a lot of listeners, but not many people that want to speak. If you are wanting to speak, I believe you have to go into the app, and yeah, you have to be on the mobile version. So let's move on. Hopefully this doesn't turn into just a podcast of myself. All right, so yeah, we're currently just testing. Please bear with us, and yeah, download the app if you want to speak. So first topic, other than Twitter Spaces, is the FTX fallout that is ongoing, and there have been some potential concerning developments in terms of DCG, Digital Currency Group, I believe, and their exposures to Gemini, which appears to have had some contagion risk from the FTX saga. And obviously DCG is a large Ethereum Classic holder. So it may be that Ethereum Classic is indirectly affected in yet another way that is over and above the multi-chain liquidity exit that Ronin recommended last week. So whilst we are...
Genesis is about to go bankrupt too.
Yeah, Genesis. Oh, Genesis, right. Is it Gemini or Genesis? I'm not sure which one it is.
I thought it was Genesis.
Okay. And is Genesis the one that DCG has exposure to, right?
No, I know that. I don't know if they have exposure to them, but I know that Genesis lent $2 billion to 3 Arrow Capital, and they're about to get wrecked too.
Yeah, there's a hell of a lot of people getting wrecked on this, and I don't think it's
like
anywhere near finished.
Yeah, circle of. Yeah. It's pretty much what Sam said on when he testified. He did exactly what he said. What he said when he testified.
What was that?
Pretty much you just take and recompound and just kind of like, just re-leverage everything until, they can catch on to it.
Yeah, this thing is...
Look it up. I'm not going to say everything what he said, but, you just got to... He pretty much described a scam, and that's what he did.
Yeah, it seems like the more this thing develops, the more crazy stuff is being uncovered, and it just gets worse and worse as time goes on. It's pretty crazy. We also have Bob Summerwell in the house. Thanks for joining us, Bob. We're having a discussion right now about FTX and the potential exposure that DCG has to that. We're trying to figure out exactly what might be coming down the line for ETC. I'm not super worried about the network itself, but obviously there might be price implications for that. But it's probably one of the largest events to happen since Mt. Gox, and that would mean probably one of the largest, like outside Ethereum things to happen since Ethereum Classic was created. So pretty big deal.
I thought that Grayscale already had Coinbase confirm their holdings, even though they don't. I can understand why they don't want to disclose the address, like for privacy reasons, and just maybe give it to the regulators or whatever. But I can understand why they don't want to, give them the address of the holdings for public to see.
Yeah, I saw some pretty level-headed comments from Werner about that, and yeah, depending on how the assets are secured, then it could be a operational security problem if they're not like a typical exchange, right? They're just doing an ETF, so, or some kind of fund like that. So there may be operational concerns about doing a proof of funds in the typical way. So it doesn't necessarily mean foul play.
They have to prove the funds too, really, just to the regulators, right? Just as long as they can see that, okay, the funds are there. But then at this point of the game, who can we really trust in terms of regulations?
Yeah, exactly. I think the whole thing was...
The whole trust me, bro. Yeah, sorry about that. Didn't mean to interrupt, but yeah. The whole trust me, bro thing is it's not working anymore.
Yeah, I think the lesson from this is actually it may have been the false sense of security from regulators that, oh, we're regulated, don't worry, that caused the whole problem and allowed people to pile on. And in absence of that, people would have been defaulting to the don't trust, verify which is ideally the first thing that everyone should be doing. So I guess in a lot of these cycles, there's a whole bunch of people that like they didn't have exposure to the history, so they weren't there when Mt. Gox happened. They weren't there when the DAO happened, and they just thought, oh, hey, it's regulated, so there's no problem, right? But I guess this is the first time that this particular version of such a big problem has happened. But hopefully people have learned a big lesson this time. Unfortunately, a lot of people are probably going to be quite, yes, it's a sad event because at the end of the day, it causes real life suffering. So I hope that, well, there's not.
I mean, it has to happen. You're right. You know, because if you think about it, if it didn't happen, that bubble would. Because all Sam did is created a bubble, right? And that bubble kept growing and growing with these IOU bitcoins and this, re-leveraged loans and everything else. So it had to be bursted. So sooner or later. So it's good that it's happening now, rather than when Bitcoin gets to 100,000, because then it would hurt.
Hey, can you hear me by chance? This is Rona.
Yeah, we got you.
All right, gotcha. Yeah, so just to add on to that, so I was reading a little bit into it, the Bitcoin price on Grayscale's GBTC, I think, and that's selling at a very low price. And what I was thinking with this is we're seeing a similar thing with ETCG, and so some people are speculating that if I guess if the price starts to reach more to parity, it's likely, with the Bitcoin at least, it's likely that that things will correct, and then if it gets a stronger gap on those prices, it's going in a bad direction. I personally, I don't really know. I've never really used the GBTC as an indicator like that. But I guess essentially they're saying what you can do is you can open up a short on BTC and then you buy GBTC, and the thought is that that would bring price parity together, back to normal. But I mean, it's totally unhinged right now. And I was just checking at ETCG, and that price is around $5. So, where we're seeing on the free market, it's $18 today. So it's interesting to watch. It's insane what Genesis did. It sounds like they got hit with $1 billion from Terra Luna, and then they did 2.3 billion or something like that of FTT, like within the last 3 months. So it's absolutely insane that that's what's going on. But yeah, last time we had the Twitter Spaces, this is what I was talking about. I had heard through my circles that market makers were pulling all their liquidity off and turning off. And when market makers are leaving the market to protect themselves, that's frightening. So I think there's a lot of stuff going on what they call dark pools. So it's liquidity pools that you can't necessarily see. This is, on centralized exchanges and OTC desks, not on anything that the retail would see. And in dark pools, there's just a lot of activity, and that's essentially what the blow up of Genesis trading is that's dark pools that are affected by the FTX thing. And so this is kind of what I was alerting, weeks ago, when FTX started, and I was saying, listen, like, get your assets to your keys. You don't know how deep this is going to go. And it may sound hyperbolic, but it's like they took a bunch of funny money and they got their fingers in so many aspects of crypto, and no one knew it, right? There's like 4 people that knew that they were doing this stuff. And so there's going to be problems like this all over because of the sheer size of the transactions that we're doing. Like Genesis is exposing is, $3 billion right there. FTX had a $8 billion hole after conning people for billions of dollars like Genesis, right? So think about how big their hole probably really was before all of the alleged fraud, I guess is what you should say to be legally correct. Um, it's crazy. And so I think for retail, what's nice about this is if you look at like the stock to flow models, we're starting to break those, and that's because this is such a big event. This is creating an amazing buying opportunity for people that have never been in the space. But it's not like it's going to correct tomorrow. So I think anyone that's getting their money into the market, you need to be very careful and understand that it's a very, very rocky road to get back to normalcy and to build back confidence and all of that. Not to mention, we just have the traditional Bitcoin halving cycles that are going on right now. So outside of all of this, you have massive Bitcoin miner capitulation happening in addition, at the same time. And and so anyways, there's just so many things going on, and it's all super bearish, and it's kind of on the Bitcoin cycle. So it's kind of what we expect. This is the time of capitulation. So please don't think that it's out of the ordinary in our cycles, but the events themselves are very out of the ordinary. We're seeing stuff that, people didn't think that we'd be able to see. This reminds me of Mount Gox and like some of the very early history where crypto exchanges would be seized by the federal government and all sorts of crazy stuff. So to all the new people in the industry, welcome. This is why they call crypto the wild, wild west. But with these type of events, you have volatility, and volatility is opportunity to make money. So just be wise with that, and appreciate that there is volatility. So if you ever wanted an asset, these are opening opportunities for you to buy at very, very low prices. So that's just my take on it.
Yeah, this thing is definitely not over yet, and I think there's a good we could be in another like 2 year at least thing because of all the fallout, and who knows where it's going to go. But
I think otherwise. I think actually what's going to happen is, because if you think about it, all of these institutional investors, they've been eyeing Bitcoin and everything else for so long, and where there's fear, there's always greed, and I think they're just going to get too greedy, and eventually it's going to start, trying to. When it goes up, I think it's going to happen really fast. Is what I'm trying to say, I guess.
Maybe this whole thing is a giant conspiracy to crash the price of crypto so that the elites can buy up.
Honestly, that's what I think. I mean, call me a conspiracy theorist, but I think here's what happened. They got the dirty Bitcoin to dump, and and then create panic and everything else to short and get all this money, and then just buy all the clean Bitcoin they can once the price is low enough. But the thing is, there's going to be so much greed. We got BlackRock and everyone else. I just drooling over Bitcoin, and they just can't wait for the price to drop down low enough for them to start buying, because that's what it is. We're at a point where it's like, this is when the institutional investors are really going to come in, or
I think
Bitcoin is going.
I think we're at a stage where we're about to see the real flush of all of the vaporware products and networks that came out in this last cycle. This is what we typically see is, prices get hammered down and everything, but this is where these centralized products, the vaporware that really has no value, it really disappears for the next cycle. And so if you look at the top 50 coins from 2017, and any cycle before that, you'll see there's like at during that bull cycle, there's all these coins that come out, and then in the bear cycle they all get washed, and then the next cycle repeats, and it's like, what's the next things that takes off? And so I think that's what's going to happen is so I think like Bitcoin and some of the ones that have real intrinsic value, I would say Ethereum Classic is in there. Um, and I would say Monero, you guys know I'm a Monero fan, like that's in there. Those things, yeah, their price will get hit, but they won't disappear, right? And that's what we're seeing is we're seeing those prices hit. But I think ETC's at market cap 26, so I'd expect it actually to climb quite a bit. Um, but like for instance, here's one that's dropping like a rock, and that's Solana. Solana is now at 18.
Yo, it's
Solana
funny. I
needs
was
to,
just thinking that too. Like, how Solana's still alive? How is it even
yeah.
a thing?
Right.
Well,
I think all the
because people have to get flushed out, right? And I think that they have staking where like you get locked up for like 30 days or something like that. So people might be trapped in Solana right now and then trying to sell and might slowly sell over time. But like that's a prime one that I expect that to be out of the top 100 market caps when this flush is finished, you know? That's definitely one that should die.
Yeah, I think all the chains that have a like either VC backing, like a massive pre-mine where there's a handful of people that hold the vast majority of coins, unlike Bitcoin, unlike Ethereum Classic, all those chains whose holders are going to be forced to liquidate because they need money. They are going to see massive price drops because of that centralization of ownership.
Yeah, and that's exactly the issue, right? Is it's the launch and it's the scam of doing a massive pre-mine, controlling all of the supply, giving a small circulating supply. That's exactly what Sam did with FTT, right? Is they issued to the public or to the VCs or anyone a very small amount of FTT, and it allowed them to pump the price up due to that low circulating supply. And then that allowed them to take their massive amount of pre-mine and just continue to dump it into the ground. And or in this, I'm sorry, with FTT, with their case, it was they took loans and put it up as collateral. But other projects can't take loans out and use their token as collateral, so they dump it to the ground. And they try to do it in a discreet way. They'll try to do OTC stuff like that, where it doesn't just cause a red needle. They also there's what is it? TWAP, I think, is a way to slowly sell off. And essentially, it's a setting where you just say, I want $11 million with this token, sell it over the next 3 months, right? You click a button and it just slowly, it's an algo that just slowly sells off. So anyway, so there's all these little, ways that they can dump. But exactly what you're saying, Astoria, is they're hard pressed for cash. Their token's not worth much right now, and they likely have a bunch of USD costs or fiat costs, development servers, whatever it may be, and they're centralized, so they have all of the costs themselves, right? And so to keep things running, like Solana and those, they likely have a high burn rate, opposed to a network like Ethereum Classic that is decentralized and bulletproof, and all of us can disappear and the network will still keep running due to other people around the world. um, so it's just, and that's the value of blockchain, right? Blockchain is pretty useless unless you have the decentralized element, that global distribution, that censorship resistance, all the stuff that we preach about. This is where it shows, hey, there's value. That's what you're investing in. That is the tech you're investing in.
I just want to clarify, because a lot of the selling and the panic is because people can't differentiate the difference between the entities, centralized entities that have trouble potentially, like DCG, Grayscale, Coinbase, FTX, etc., and the blockchains themselves. People think that the blockchain is going bankrupt. So just for anybody who doesn't know, the blockchain is one thing, it's decentralized, especially proof of work blockchains, and they don't have assets and liabilities. They only have accounts and balances, and they're absolutely separated from the centralized entities that may go bankrupt or not, who are managed by humans, etc. That's one thing. The other thing is that in the case of DCG, DCG is a holding company that has several subsidiaries, and legally, their subsidiary, which is the broker dealer, which is Genesis, that can go bankrupt because they have typical broker dealer counterparty risk, and If they were dealing with FTX and they have assets there, may have lost assets there, or just because of systemic risk, because sometimes when one dealer in a network of dealers, if one big dealer falls, then others can fall, not because they were insolvent, but just because they had assets in the other dealer. So that one can go bankrupt. That doesn't mean that DCG is going to go bankrupt. It's very likely a limited liability company. On the other side, DCG owns Grayscale. Grayscale as a investment company or as a mutual fund company has to segregate funds, client funds. So it's highly unlikely that the Bitcoin, ETC, etc., that is in their funds, in the funds of Grayscale, are not segregated unless there is fraud, which I think is very unlikely. So those funds are very likely secure because, legally at least, because they are segregated from DCG and any other company that DCG may own. Doesn't matter if other companies go bankrupt. And in the case of Coinbase, which is the custodian, Coinbase also has a similar situation. Coinbase, the holding company or the exchange company, that company may go bankrupt, but that doesn't mean that their unit, the custody service, which is a trust company, will go bankrupt, or that those assets are not segregated. The division of Coinbase that is the custody service is very likely all segregated assets and isolated inside the blockchain and not legally tied to any assets or liabilities or risk. They're just isolated in accounts, and it's not one account, one address that you can go and check out. Because of their security system, they must have thousands of addresses, and the funds must be separated in thousands of addresses on the Bitcoin blockchain. But the important thing is that in the legal layer, in meat space, legally, the funds of Grayscale, those isolated entities, have to be segregated in terms of funds. And they have the assets on Coinbase, and that unit of Coinbase, which is Coinbase custody, has to have their assets isolated as well. So that segment of the market is not at risk. The ones that are the ETFs and the assets of the mutual funds. The entities themselves, Genesis, the broker dealer, DCG even as a holding company, and Coinbase as a holding company, those they do have systemic risk. They do have assets and liabilities, and they can go bankrupt, but not the GBTC or ETCG and those products. And all of this, the caveat is unless they committed fraud, open fraud, no? In that case, well, it's just stolen funds, etc. But if everything is normal, those funds should be segregated and safe. Safu.
Thanks for that, Donald. Yeah, just to clarify something that I said before, I wanted to make sure I got this on record. I accidentally said Gemini at the start, so I got confused with Genesis and Gemini. So yeah, Bob was just making a comment in the Discord that I wanted to mention here. So Gemini, Genesis, Grayscale, and DCG are all potentially in the mix, it seems, with Genesis having made a huge bad loan, and then uncertainty within the DCG group as to how to resolve that situation. Allegedly, Wednesday is when some resolution is needed. Sorry, what was that, Brola?
So, but no, what I was gonna say is, in terms of like the problem is people are, they're not buying the coin itself. They're buying perpetual swaps. They're trying to long Bitcoin, long this coin, long that coin. They're not buying the coins themselves and withdrawing the coins from the exchanges. They feel so comfortable keeping it on the exchange. And I think, this also is good that people understand that if it's not your keys, it's not your coins. So if you keep it on the exchange, you don't have that coin, and you don't, you're not going to get that coin if anything happens, more than likely. And if you do, it's not going to be for years, because I'm still waiting on my Cryptopia coins that were stolen, back from 2019. And just now they're doing the accepting the balance. So it's very important. But the reason why we got to this point, and somebody said it before, is because everybody kept buying IOUs and leverage their trades, and they're re-leveraging and this and that, and instead of buying the real deal, and that's how we got here. If everybody was constantly was DCAing their Bitcoin and everything else and withdrawing it from the exchanges to HODL or whatever, we would not be this deep.
Yeah, totally. I think in reality, it could have been any asset that FTX were selling here. It just so happens to be crypto, and it's not really anything to do with crypto itself. It's more to do with the scam that used crypto as a means to entice people to use it. It could have been Pokemon cards or Beanie Babies exchange, but it just so happened that crypto was in the firing line for this one.
Right. And the failures that we see is that it's all a one directional movement. And so it's not organic. And that's putting stresses on any system, in centralized or decentralized. And so that's why what you're seeing as an example of the decentralized risk that's going on here is we have these great decentralized systems that do wrapping and all this stuff. But you're still seeing that because it's a one direction of liquidity that is unexpected and unprecedented, and really a bad actor trying to exploit certain ways to get their money out. We're seeing the REN BTC, so the wrapped BTC on the REN network. That's what the FTX hack, which is, who knows who. I don't think anyone believes it's really a hack, but the FTX drainer is cashing out their ETH for that REN BTC. But because they're doing it in such volume, you're seeing crazy prices. You're seeing all this fluctuation going on. And it looks like I'm reading that there's only like 3,000 Bitcoin that they can even cash out to. So they've essentially converted those stolen funds to a bunch of Ethereum, but they know the censorship risk of Ethereum. So now they're trying any avenue to get out of that censorship trap. And that's where they're trying to use DeFi protocols because they are good protocols. It's just they don't have the type of liquidity to pull off this type of heist, right? And they just are doing it with so much money. So anyways, there's a great account to follow. Oddly, it's named Ergo, like the chain that stole our Twitter account, Ergo BTC. And this guy has been tracking on-chain wallets and activity forever. And so I highly recommend giving that a look to just see what's going on with these type of moves. He's been tracking hacks forever on chain and has really nice graphs and kind of walks you through things with threads. So it'll help novices that are kind of wondering why are these prices moving like crazy and what's going on. It's because they're hitting low liquidity pools and shaking things around. The FTX stuff is. Also, please remember that the prices you see on CoinGecko or CMC, they just come from a collection of liquidity pools. And so when people like market makers pull their money off the table because they see huge systemic risk and they need to protect themselves by sitting it out on the sidelines, that means there's less liquidity on those centralized exchanges. So I'm guessing if we looked at the order books of these centralized exchanges, they would be a lot thinner. So that means if you sell anything with any sort of volume, you'll tank the price, or you can also shoot up the price very quick if you buy stuff. So just keep that in mind when you start seeing prices going wild, especially on lower cap coins. That'll definitely happen as market makers pull their money off of the lower cap tables that have higher risk and consolidate into only operating on the big liquidity pools like BTC to USDT, right? So that's just kind of some logic on what's going on the backside in the markets and liquidity.
Some wise words from RARAGRR on the Discord. Take a break, relax, preserve capital, and wait for a market structure flip. If one still wants to DCA, dollar cost average, please be aware that $12.50 USD level can be lost, so toe dip and wait for the price to grind to the bottom. Obviously, this is not financial advice, but the price of ETC could go anywhere. But I think that there's a couple of points I wanted to make here. One being that this is probably also going to be used as an excuse to try and clamp down on regulations, and we've already seen some.
Here is Dora.
Yeah, I think they can hear me. I think. Can you hear me, Brolo? I guess not.
I can hear you.
Okay. So yeah, regulations are probably going to come, at least in the US.
Do you hear Istora talking?
Yeah, Brola, I hear Istora. I can hear you as well.
Okay, it means I can't hear. Okay.
All right. So yeah, regulations are on the horizon, and that might affect the whole crypto space. But what really matters are the fundamentals, and it's something that ETC has always been pushing. And regardless of what happens with the price, those fundamentals are going to stay. So it's like the market cannot appreciate them for some period of time until they're forced to, and it seems like that time is coming. So strap on, because it's going to be an interesting ride.
Yeah, and that's a great point on this is why a predictable monetary policy is so important, and it's so great that we have the 5M20 policy, because we know how much will be admitted on our network, and we know when the selling pressure due to the emission amount decreasing will relieve, and so that you can build thoughts on, I guess I think that's kind of the basic foundation of stock to flow on Bitcoin. We could probably build something for that for Ethereum Classic. It would be more gradual due to how ours is set up. But yeah, all of that stuff, by having constants, by not changing all the time, by not having one central figure like Vitalik that decides whatever monetary policy. And their wild monetary policy, right? They're 3% inflation one time, and then they're trying to be deflationary. You can't withdraw any of your staked ETH. I mean, there's all sorts of, think about all those issues. We don't have any of that stuff. Ours is slow and steady, very predictable, and that's what you want out of money. That's what makes Bitcoin great, and that's what makes ETC great.
Yeah, it ties into that thing about you don't want to move fast and break things for something so important. And like ossifying the protocol is such a massive benefit in situations like this, because regardless of what pressure comes from outside, nothing can change it. And that is something so unique and so undervalued, at least in this cycle. But as mentioned, I think that is about to change.
Yeah, I was speaking at some conferences about ETC recently, and people were saying, "Oh, there's no innovation happening there. There's no, like all the innovations happening on all these cool chains, blah 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 blah, all this new stuff." And it's like, yeah, that is great innovation, and if it's EVM compatible, it actually is innovation for our network. But we are actually innovating here. We're innovating in the decentralized, the censorship-resistant way, those type of things that are often forgotten. But it's that resilience. That's where our true innovation is. Not many other networks are doing that. As an example, the way we're operating our Twitter accounts, I haven't seen any other project doing that. Twitter Together, those are the type of things that we try to solve. Granted, it comes with very public contentious problems where we have client maintainers running out and trying to hijack the network, or our Twitter account getting stolen. We have all sorts of stuff like that, but that always presents opportunities for us to decentralize further, to build better, to remove, as Donald put it, the meat space from the network and decouple that. And I think that's our real innovation, and I think we're doing great on that. And I hope, as we bring in more people into this network and we grow, that continues. And as bigger money comes in, I hope that they hold those principles and values, like for instance Bitmain and those. I hope we don't try to see corporate capture or anything like that, because if you try to corporate capture ETC, you actually are trying to devalue it. And so I hope I hope we really keep those principles and keep innovating in that way, especially as big money starts coming in, so we don't fall into the trap of the VC Ponzi schemes that we're seeing collapse Solana and all these other networks.
ETC literally innovates every time they declare ETC dead.
Right. I'm imagining the famous meme of death knocking on the door of Bitcoin, and you could easily just replace that with ETC. The number of times, oh, it's a dead chain, it's a dead chain, but we ain't dead.
Yeah, just look at the network hash rate. It just says it all.
Yeah, I mean that's been the greatest story of of this year for ETC has been I think we always had the thesis that this is what would happen to ETC when ETH moved to proof of stake, and then the fact that that's a reality now, that we have that security and we are the largest smart contract proof of work chain. It's the positioning is amazing, and now what's great about that is Bitmain's first coming in with these funds, but I guarantee you a lot of these VCs and people will be trying to come in, and we'll likely see a corporate capture attempt from someone. I'm not saying Bitmain. I don't know who it will be. Bitmain hasn't signaled anything like that, but we'll see something like happen on Solana where you see the VCs try to do a bunch of projects and do those pre-mines and dumping. And so I think we should be cautious. It'll be exciting to see a ton of money flood in here, but keep cautious, and don't trust, verify, right? The classic phrase.
Right. And yeah, I think as the rise of the Phoenix continues, then absolutely there will be corporate interests that try to take advantage and capture the system. But it has been methodically designed in a way, and the philosophy and the protocol itself are so resistant to that maybe there'll be something like the Bitcoin Cash split, but there'll always be something called Ethereum Classic that continues with the original vision. So whether they attempt to, I mean, one potential scenario here is that in the same way that you have massive stablecoin controllers of DeFi that could basically say, hey, this version of the chain is the one that we're going to migrate to, and therefore you must use this client if you want to have all the DeFi activity. That's separate from the protocol. And I think the protocol is sound, and we will run into these kind of contentious debates in the future, but that will be a good problem to have, because it means Ethereum Classic's successful at that point, and we can cross that bridge when we get there. And I think having the strong principles that have led us this far will allow us to go through those difficult times when they come.
Yeah, ETC is in a unique position. If you think about it, it's kind of like a virgin chain that's completely unmanipulated. It's, from the very beginning, it's the original unmodified protocol of the original Ethereum chain. And there's not a single other chain out there that's like it. There's other Ethereum forks, so that would be a fork of a fork of a fork, but there's no Ethereum classics or chains alike out there, period. So, there's a reason why we have the majority of the miners, and they're miners betting on two major chains, which is Bitcoin. If you look at their all-time high for their hash rate, it's through the roof, and similarly, Ethereum Classic. I mean, we're up there.
Absolutely. I think the miners as a collective are pretty savvy, and they can tell which projects are potentially having future value. And there's so many out there that have been in this game for such a long time. They probably have extremely good bullshit detectors at this point. And yeah, as time goes on, those bullshit projects will just cease to exist. So we just keep on going.
Yeah, and Donald, so it's my understanding that you're gonna start running some marketing campaigns, and I think that this type of content is probably really good to build kind of the to share the positioning and the uniqueness of Ethereum Classic in these type of environments with what's going on right now of, Ethereum Classic compared to Solana, right? And why did Solana fail and why will Ethereum Classic not fail? I think that type of messaging might be an opportunity to just bring the Ethereum Classic value prop to the industry and to new people, and then put it in the context of the bad stuff that you're seeing going on right now. This is happening because of all of these failures of these other networks, and that's how Ethereum Classic is different. So just a thought, as you get into those marketing campaigns, as you've taken on that role.
Thank you. I'm writing down that. So the idea is to write about why did Solana fail and why did ATC did not fail.
Yeah,
I think why it can't fail.
I think that those type of, and then probably some other things could be comparing the predictable monetary policies of Ethereum Classic to Bitcoin stock to flow, and then and how that's very unique to other chains that are failing that don't have predictable monetary policies, and you can't financially plan around. But yeah, just kind of the stuff that everyone's talking about, we can use that as a base layer to show how Ethereum Classic is different and better. And you really see that in a lot of Bitcoin messaging. This is a blockchain problem. This isn't a Bitcoin problem, right? They always say that. Jack Mallers just is great in his interviews of doing it in about 30 seconds. He can get a clip, and then it's so easy for people to understand. So that's good inspiration.
Yes, I have the majority of the topics in the pipeline, but I'm going to add this idea that why did Solana fail and why did ETC not fail. I'm going to think about how to word it, and but underneath is a comparison between proof of work and proof of stake. No.
Yeah, proof of work, proof of stake, and then likely some of the things you would hit would be centralized VC, centralized total out of the total supply, centralized total supply, very small circulating supply. So retail only can get 20% of the token, right? So it's just all of this stuff that comes into and then likely I'm guessing the emissions. How do you even acquire Solana? It's all those barrier to entries that create an unfair deck for the VCs and the people that started it. And that's the stuff you don't see in Ethereum Classic, right? You can turn on something and start mining Ethereum Classic and start accumulating it. And that's why we stayed with ETH hash, and that's and proof of work and all of that, along with many other things. But the barrier to entry to participate.
Mm-hmm. Good.
Yeah, ETC, like Bitcoin, has no liability. It's just it all really is just simple as that. There's no liabilities because we don't trust. We verify everything. So there's no CEOs. Nobody's running the show. There's no. We do have one team right now, which is the only thing that's a bit concerning. That we only have one team, but other than that.
Yeah, well, the good news is that the protocol is roughly in a good spot, so it's really just client maintenance. But I agree with you that it is scary that we're only down to one team. So hopefully that changes. Another thing, Donald, to hit on would be tradable volume and liquidity and like the depth and how many markets and maybe integration in the entire greater ecosystem. Just some other points some notes in there that I'm just thinking off the top of my head.
I wrote it down.
Yeah, credit to OmniEdge for the quote. If your blockchain has a CEO, it ain't going to make it. I think that rings very true and puts it succinctly. And just a couple of comments from Discord. We had Bob mention a tweet saying that Genesis previously earned $2.36 billion to the bankrupt Free Arrows Capital. So that's a pretty big black hole if it's all gone. And then Code 203 mentioned that market dominance climb during downtrend versus other chains is a good indicator for fundamentals.
Yes, I believe that might have been the gentleman that was talking on the last call that we had, and yeah, he was saying that we're gaining market dominance in ETC, And that's exactly that's a good way to look at it, of trying to figure out all of those other altcoins that are getting flushed out. What you'll see is you'll see Solana, because it was pumped by all those VCs and put in front of everyone's face in the crazy marketing. Well, that's essentially a massive pump and dump. And what we'll see is that Solana will completely lose off its dominance in the greater space, and likely by next cycle that will be a completely obsolete chain that has, it might still hang around, but it'll be way low on the market cap. And what you'll see is good products and good technology like ETC, for instance, will slowly organically keep increasing. And also in these times, what you see is Bitcoin increases its dominance, and that's because people dump their altcoins that don't have a chance, and that they were hoping to sell it to the greater fool, right? And then they run into Bitcoin. And so that's what you see. And so Bitcoin typically increases its dominance in these bearish trends because everyone runs to that. You'll also see people run to stable coins as well. So you'll see dominance increase during that as well. So good patterns to look at, and you can look at it over the previous bear and bull cycles to kind of get an idea and get your mind around that type of thinking.
Yeah, I like to go back to the analogy of the house built on rock versus sand. And when times are happy and everything's good, then yeah, you can build a house quicker if it's on sand and you don't do the foundations. But when the storm comes, you need to be built on rock, otherwise you won't exist anymore. So Ethereum Classic has put a lot of effort into the groundwork, and that is paying off now, I think. And the future's looking bright. We're in a very good spot.
And just to, so that, like, I don't want to seem like I'm just totally shitting on these centralized products that raise a bunch of money and then pump out, they do pump out development. So there is learning experiences there that we can use by looking at them. Like for Solana, for instance, how did they manage to capture so many people and get them interested in their chain? So there's marketing material that you can review from that. You can see the order of operations that they built things. You can see where they integrated their token and ran marketing campaigns to gain new users. Those are things that we can use to learn and better ETC while we have been working on the foundation, as you say. We have a very strong foundation. We're at a point now with the network hash rate that now we're more about we're getting towards outreach and building on top of it in this life cycle. And that's a beautiful thing. It's been 7 years. But we can use these networks like Solana and these ones that will essentially vaporize as learning examples, and take those strategies that were successful and apply them to Ethereum Classic to increase this network. And so I think we shouldn't always just look at the negatives. There are positives on these cycles and these centralized chains.
Yeah, I agree. The only downside, I guess, is that a lot of these techniques are basically just funded by loads of VC money that can't really be replicated that easily. Like, why would you buy a bunch of bots or throw massive conferences all over the world in many different countries when there's no central company that benefits from doing that directly? And really, the only way for ETC to effectively market, and it's more of a long-term strategy, is through grassroots, unless there was some big pot of money there. But maybe that kind of segues nicely into the next topic on the agenda, which Ronan, did you want to bring up about the infrastructure grants?
Oh yeah, I think I had made a note. Is we're nearing the end of the year, and ETC Co-op had said that they were going to get their grants out this year by end of year. So I was just curious what was going on with that 250K infrastructure. I know I had mentioned some items to Bob to see what they were doing, but the thought is get coins right there. It's pretty easy to issue grants to start doing stuff. So I was curious. We heard a couple months back that they were getting ready to launch it, and so just curious on the update there.
Yeah, I mean, Bob is not speaking in this one; he's just listening. But I did hear at the end of the interview that Bob did with Donald that he was hoping to get some grants out before the end of the year. Whether this is the Grayscale funds or the Bitmain funds, I'm not sure. But it seems like that wait is going to end soon. So fingers crossed by the end of the year, we'll have some grants in developer hands.
Yes, I recommend everybody to go and see the interview with Bob. He talks about all the important projects that the ETC cooperative is conducting now for Ethereum Classic. One of those, just to clarify, one of those projects is the grants program, which is the donation by Antpool, and it's $10 million, of which half are in USDT on Ethereum and one half are invested in ETC on the Ethereum Classic network, and they are in a Safe wallet, which is a multi-sig wallet, which is this new app that the ETC co-op launched. In terms of information about the grant program itself, like Bob said in the interview, it's still being organized. How the decision process is going to be done, and people can start applying. But his goal is that by the end of December of this year, he would like to see the first few grants already going out.
Could I ask Donald if you know the relationship between Bitmain and Ampool? Because I saw on the grants website that I believe is work in progress that the multi-sig is controlled by both parties. So do you know if they have a relationship there?
Bitmain is a chip company. They produce ASICs and the machines that I think is the largest producer in the world of mining machines for proof of work blockchains. And they have a subsidiary which is called Antpool. I don't know if it's 100% subsidiary or if it's an investment, but it's the relationship between Bitmain and Antpool is that Antpool is a sort of subsidiary, but I don't know the legal setup. But they are related companies.
Okay.
So Donald, have ETC Co-op and Bitmain, have they now commingled their funds? Is it now 10 million and 10 million 200,000 250,000? Is that now the new, it's all one big pool? Is that my understanding from your statement earlier?
Oh no, the if that is something that Bob is in charge. I only do the editorial calendar and all that, but the information that we spoke is that the ATC Corp has its own finances. It has, like we announced, it has more than $5 million in cash, and that's gonna finance the operations of the co-op for several years. I think part of the spending is going to be in grants, but that grant program is specific to the ETC cooperative. And then this other grant programs, which is the $10 million donated by Antpool, is a separate grants program. You would have to ask Bob if he plans to make this, almost the same decision making process to direct both funds, but I don't think so. That's my personal opinion, my personal hunch. But they're two separate projects and entities.
Gotcha. Okay, and then and that's what I was curious about, because my understanding was that Bitmain's $10 million fund might have some strings attached when you seek funding from them, and my thought was that the $250,000 from Grayscale would not have strings attached, since it was a donation for network infrastructure and all of that. And so that's what I was hoping to have some clarity on there of what's going on, because some people might not be interested in building any products with any sort of strings attached. And then also the 250K, like, that makes a whole lot of sense to allocate that towards infrastructure and public goods that are necessary versus building a for-profit protocol, right? Because ETC Co-op is not a for-profit company, so and those funds weren't donated in a way to be for-profit, right? Profit seeking. So anyway, so those were kind of where my underlining thoughts were, and why I just am kind of asking for some clarity is to understand the motive and intent behind the funds, and if there's, as an example, a revenue share if you build with their funds, right? So essentially it's like a seeking VC funding if you did it in that way. So
if you watch the interview, you're going to see that Bob clarifies that the fund itself is not a VC fund. It's purely a grants program. It doesn't seek profit or anything. It's a pure donation, charitable donation in that sense. And it's going to be managed by both ETC Cooperative and Antpool. And then the other program, the one that is 250, I think, but you have to confirm with Bob. He didn't speak about that in the interview. Is a separate program, and that's exclusive of the ETC Cooperative. But the other one, Bob says in the interview that it's not a VC. That's something that he clarified with them. It's not a VC, and they're not seeking for-profit projects. They just want to fund the DApp layer mainly, and promote more developers to build on ETC.
Okay, thanks. I'll give that a watch. I haven't seen it.
All right, well, shall we move to the next topic, which is, well, there's two topics here that are kind of related, and that is growing the ETC community as a whole and trying to link up different groups together. And there's various ways of potentially trying that. One is through these POAPs, which are like rewards for contributing, as well as something to do with launching a Mastodon instance and linking that with POAPs, which you wanted to talk about, Ronan.
Yeah, so I was, this was actually a thought, and this was just building off of, I can't remember how you say his name, but W1G0. He had
I think it's WeGo.
Oh, WeGo. Okay, so WeGo, he had suggested to link our Twitter Together accounts to a Mastodon account, and he had created a Mastodon account. And so I thought that was a good idea. We had experimented with Mastodon back in about 2019 as a network when we were doing the website remodel back during that time, and that was fun to experiment. They didn't have a lot of users, but with all the stuff that's going on with Twitter, Mastodon is starting to see record new signups and they call it toots. So they're starting to see new posts are hitting all-time high. And so I started looking into it of how it's structured and all of that. And I thought, well, we have the vanity name ethereumclassic.network that we could use as a domain that right now is sitting idle. It looks like a Mastodon server is not very expensive to host on the cloud. So we could essentially set up our own vanity Mastodon server. And then, we had also, this is building on the proof of participation, or I can't remember what the acronym stands for, but someone had an idea about that. Was it Crowbill maybe? And saying, okay, well, yes, we can issue NFTs for contributions and all of that, but maybe we could give them something that's, real and tangible in the sense of something that you could use every day. And that is to have a vanity Mastodon account, and then that person can link it to any of their Twitter accounts over time, and it can be kind of their steady Mastodon account. And so how it would look on Mastodon is it would be at username at ethereumclassic.network. And that would populate any posts on that account would populate to all of the other federated servers in that way. And so that's essentially kind of like the Ethereum name service that you see on the blockchain in the block explorers. we can do that for the Mastodon tweeting experience. So it was just a way to think of what can we give people and incentivize them to start contributing, because we really need more hands on deck. I mean, it's been the same 10 people for the last, whatever, 2 years, I would say. We have new people coming in the ecosystem, and we are seeing new contributors. So I don't want to discredit them, but we're seeing like great graphic artists are coming in and tweets and all of that. And so we're starting to see that. But it'd be great to just keep building on that and get it to where we're getting material amount of contributions from a lot of new faces. As someone comes in, if they're active and posting, it's like, well, hey, we have a lot of easy tasks that don't necessarily take technical skill sets. Everyone says, oh, well, I'm not a coder, I'm not a developer. Most of the work is not that. It's doing great work like what Donald does, writing articles, spreading the message, doing explainers, helping pump out just basic tweet content on a steady basis. There's just so many things: proofreading, grammar, and Estora, that you of anyone knows that there's tons of low-hanging fruit that any sort of lending hand will help out, and you've been doing such big lifts. So as I just see, your workload is humongous, and it's about how do we incentivize other people to start helping you out.
Yeah, I guess there's a couple of things there. One is that I think we mentioned on a previous call that it would be nice to just have a list of things for people to do. And that is another one of the low-hanging fruit itself that is, again, on the to-do list. But really, anyone in the community that's not a developer, please step up and help out with that, because it would have like a domino effect on helping people contribute. So it's like a really low-hanging and big juicy fruit that someone could just go out there and do. I mean, I could do it as well. Anyone could really do it. But yeah, there's other things that I would like to work on. One of the next things in the pipeline is a user interface for making it really easy to make contributions, like submitting pull requests for tweets, and also updating the website with new videos and apps without having to make a pull request themselves through the GitHub UI to make that easy. But yeah, just if someone could write a list of things that might be helpful, that is a huge benefit. So yeah, if you're listening, please help out with that.
Yeah, and just to some of the new people, people like myself and others that have been here for a very long time and in the space, we don't look at things the same way as you do. So where you come in, you might say, oh, this wallet or this guide is really hard to follow. Oh, I'm hitting a pain point here. Like making notes of those in like the volunteer, like, hey, can we clean up the instructions for how to use MetaMask with ETC, for instance? Or, hey, can we do this? You'll run into all these friction points that someone that's been in the space a little bit longer and has a little more exposure like has forgotten about those pain points. I can't even go back and think about them just because it's just been too long since I went through that onboarding process. So you're more in touch with a new user to the network than someone like me, and so that's where you can really add value. And so the hope is that we can kind of encourage those type of people, because they'll have fresh eyes, fresh ideas, and they'll be able to see, oh, we do need some work here. This was really hard for me to set up or to understand, or alternatively, this was really good. This is what I understood really well. We should promote this. We should try to get some tweets out about it and share this. So don't think that just because you're new or anything like that that you can't contribute. You actually add a ton of value because you come from that type of perspective of seeing it with fresh eyes.
Right, and I genuinely believe that every individual is on the same level fundamentally, and it's not really the individuals that matter, it's the ideas that they have and the things that they do that contribute to the project that really matters. So even if you're a complete outsider and you haven't even posted a message or a tweet on Discord and you're just listening to this, then there really is no barrier to entry in contributing to ETC, and everyone is on the same flat level in terms of authority of the protocol itself. So yeah, please make sure you don't be dissuaded by the apparent sort of hierarchy in ETC, because it's not, it really doesn't exist. It's more of just a sort of informal sort of, you know, people get to know each other and talk because they're comfortable, but that doesn't mean you're not included in this. So please feel free to contribute, as we continually repeat.
Yeah, and just to give you guys an example, like me and Astora, we've never met. We live other sides of the world. We both just showed up in the project. I mean, generally I was in Anon before, but we just started submitting PRs on GitHub. We're not funded by anyone. We're 100% volunteers. And we just started doing that. And we've been doing now, you know, we have a familiar relationship because we have worked in that way together online on similar tasks. But no one told us to do this. There was no instruction. We just started I personally just logged in and I said, wow, this website is 100% dated. There is not even new stuff for over a year. I'm just going to start updating things while I learn about the network. Any new wallet, anything I find, I'm going to add it into these lists and do that. And that's how I got involved. And that's how I've been involved is from that is I just said, oh, this network needs a lending hand. And so I just started helping out in that way. And I think Astora is the same way. He's very good at website coding, and he did a big remodel back in 2019 of that. And then we worked together on building the content and all of that. And now you've seen a new one, and I think the content's gotten better. But if there was more helping hands, just think about how great the content and the material would look to the outside observer. And so I hope that that's kind of a learning experience of, you know, we're just two guys around the world, and hopefully we hope that there will be many other people. Bralao as well, right? He's helping do with these calls and everything. That's all volunteer, and we just happen to form relationships by volunteering and helping the network. Hopefully there's funds to do stuff in the future, but you can always start out and, you know, start out just by lending a hand. Lots of simple tasks.
Yeah, and the great thing is, because of this emergent sort of duocracy, as it's been dubbed before, like, you can just focus on what you enjoy and what you think gives value. So no one tells you what to do. You are your own boss, and you just, you know, do what you're good at and think adds value to the network. And it's, I think, for me at least, the payoff is knowing that I'm contributing to something that in the long run is going to benefit the world, I think, in a pretty important way. So you get some good sense of well-being by contributing.
Yeah, and your contributions, there's no one that's going to say, like you're saying, no one's telling you what to do. So you're going to think of things, whoever's listening to this, you're going to think of things that none of us have thought of, and that's great. Please bring that to the table. No one's here to you know, to try to censor you and your contributions. So, you know, whatever you want to bring to the table, as we saw with who's the ETC network gentleman, etcnetwork.info, the dashboard. It's absolutely fabulous. And, you know, no one talked to that guy. All of a sudden he shows up, has this great dashboard that has analytics. And it's like he was interested in an analytics project, and he put up an awesome Grafana dashboard. It's something I've wanted for years, and to see someone do that, it was just amazing. So that was a great lift. But that's a prime example of just someone showing up on the scene, built a cool product that helps everyone, and you know, and I think anyone that looks at it is super grateful for it. So hope to see more of you join us and contribute.
Yeah, that would be Mario, I believe, who helped with the dashboard there. Okay, next topic. This is just an idea I had that I like to occasionally bring up in these calls, and that is creating a mega bridge, which is basically a Matrix server. So Matrix is a messaging platform that one of its main benefits is that it has lots of integrations. So it can talk to Telegram, it can talk to Twitter, Mastodon, GitHub, etc., and of course Discord. And the idea is to create a mega channel that for each Discord server and each maybe hooking into the various different Telegram channels as well, just combine all the chatter so it's in one place and is relayed between these currently disparate servers. So it will be noisy and may not have perfect moderation, but at least would be like a fire hose of all the information. So if there's any like interesting stuff, people can just look at it and they don't have to worry about, oh, there's something happening in the ETC Army Telegram that we're not seeing in the ETC Discord, and there's some important tweets that are not getting relayed properly, etc. So that is a thing that I think is fairly simple to set up. But again, just wanted to put that out there in case anyone thinks this idea is good. Okay, so we are 20 minutes over the hour. It's been a good first Twitter experience, despite minor teething pain at the start in terms of getting people aware of the use of, well, myself included, the use of Twitter Spaces. And as usual, I would like to open the floor up in case there's any people that wanted to say hi or bring up a topic that we haven't covered in this week's chat. All right, well, on that note, I will sign off and just wanted to remind everyone that if they wanted to submit tweets to the Ethereum Classic, one of the two Ethereum Classic community managed Twitter accounts, they can do so using the hashtag ETC tweets, and that will go straight to our Discord and we can moderate those and create pull requests on your behalf so they get added, and we will also credit the original creator of those tweets, as you may have seen on the Twitter. So I think because this has been a success on Twitter Spaces, we'll probably do the same thing next week. So you can find us for the next call, ETC Community Call number 33. Same time, same place next week. And until then, take care, stay classy, and have a good one. So thanks for joining us. Take care. Goodbye.
Thank you. Goodbye.
See you.